You ready? You got me running, you got me running, got me running. Shake it, shake it, shake it, shake it. Raise your hands up, raise them up.
All right, hi everyone, and welcome to Friday's currency call with Forex Trading Asia. Thanks for joining us as well. And if you are watching us live right now, welcome to the LCMS Trading Club members too. And if you're not and do want to catch the live call, make sure you hit the link in the description section to join the LCMS Traders Club. So just a quick introduction as well. We are on episode 412. It's the 5th of November. And a quick introduction to the folks watching on YouTube as well with the delayed telecast. We do analyze the currencies as follows on the currency call. So we do this Monday to Friday, GMT +8 every morning. And then we do Monday, Aussie and Kiwi, Tuesday, the Euro, Wednesday, the Pound, Thursday, Yen and Gold. And then on Friday, we also do the CAD and cryptocurrency. Now, this call is focused on market economic updates, providing you with the key support and resistance levels. We discuss trade ideas and also breaking fundamental analysis. And we also go through big news events that are coming up, including the NFP later this evening in our time zone. And this currency call will be very beneficial to both the long-term investors and the short-term traders. And here we will go through what could move prices, the possible trade ideas, and we'll also talk about the potential targets and the risks in regards to stop loss positions. Finally, a disclaimer. Any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering any trades as well. So to start us off today, it is Friday morning. We did have quite a little bit happening recently, and we've got currency strategist Kim Hong, we've got OPEC Plus, Bank of England, and we also have an NFP preview as well. So over to you now, Gimme, for the main event.
All right, thank you, Scott. Happy Friday, everyone. Okay, let's start off with the first item on the list, OPEC Plus meeting. Let me just show you guys the statement. So, oops, am I lagging? Okay. Well, as expected, the OPEC Plus, despite, the whole strong pressure coming in from the United States, okay, urging them to actually produce more oil, okay, despite that, they decided to hold their, monthly production hike unchanged at 400,000 barrels per day for the month of December 2021. Okay, so yeah, it's kind of like a pain because oil prices has been rising and causing like inflation to rise like nobody's business around the world. Okay, and with that, they have been told many times, plead many times to actually increase more production and so on and so forth. In fact, the US, I think they were actually trying to ask the OPEC Plus to double the amount of not rate hike, I get ahead myself, double the amount of oil production hike, okay, double. So, the planned hike is 400,000 barrels per day. So they were, the US was actually trying to get the OPEC Plus to hike by 800,000 barrels per day, okay? But that's not the case, and yeah, it didn't happen. So it actually shows how I would say how strong and not easily influenced is the OPEC Plus. Okay, just because the United States is the world leader doesn't mean that they can easily have an impact on the OPEC Plus decision. Okay, and I think it was yesterday or the day before. Yeah, the day before, I was mentioning actually that a couple of members, OPEC Plus members, Nigeria and Angola, okay, they were actually struggling, okay, to pump more oil back in October, all right? So the OPEC Plus also mentioned that they will not compensate for members under production. Okay, so what this means is that if let's say Nigeria has a production baseline, okay, meaning they are allowed to produce up to, let's say, 200,000 barrels per day, and then if they fall short of that figure, say for example 100, they only manage to produce 150,000 barrels per day, then the OPEC Plus is like, we are not going to compensate whatever is being not produced. Okay, so why is this an issue? All right, because remember, if the OPEC Plus decides to hike oil production, okay, by 400,000, okay, falling short of that figure would mean probably like 300 or 200,000, right? So it actually means less oil, or rather should I say less supply of oil were being given into the market, right? Were being put into the market. So as we all know, right now, the demand of oil is already rising, right? Because of the whole opening up of economy around the world. We have travel lanes, VTLs, and things like that. Planes starts to fly, cars starts to move, and things like that. The demand of oil has increased. And, 400,000 barrels per day of hike is low. And right now, the OPEC Plus is telling us that for October, we didn't actually fully hit the 400,000 barrels per day hike because, countries like Nigeria and Angola are struggling to produce, right? And with that, none of the other producers like Saudi Arabia or maybe like say UAE will actually compensate for the underproduction. That leads to, I would say, this is uncertain level of supply coming from the OPEC Plus, okay? So not very good, okay? So personally, I would still expect oil prices to remain, around the same level, okay? Although right now, if you just look at the oil chart for WTI, it has actually dropped quite a bit, but personally, I think oil prices will still be strong, okay? Given that, it's end of the year, winter is coming, the demand for energy is increasing, okay? So the OPEC Plus will meet on 2nd of December, all right? And that's when they will actually decide, or maybe should I say, to decide by how much of a oil production hike they will carry out for the month of January 2022, okay? But before that, all right, before 2nd of December, I would like to bring your attention to, when is it again? 29th of November, okay? Why is that the case? Because now, talks on the 2015 Iran nuclear deal will resume on that day, 29th of November, okay? So at the moment, Iran is, having some US sanctioned, such that they, the oil production coming from Iran has been suppressed very, very, very heavily, okay? So, the talks has been going on for like years and things like that. So this time round, okay, if there's any good progress in the being made in the talk, all right, or maybe better still, a lift of the sanction from Iran, okay, then we can actually expect Iran to produce, it's likely going to just open all its tabs and just go full speed ahead, all right. And I think it was, speculations were, market analysts were actually speculating that if the US sanctions were to be lifted from Iran, that will actually increase Iran's oil production by 1 million barrels per day. Okay, so before we head over to the next OPEC meeting, let's just pay attention to what goes down during the Iran nuclear deal talks and see how it goes, right, between Iran and the US and some other major countries as well. Okay, so if things goes on well, we can expect a hike in oil supply, okay, an increase in oil supply that will actually have an impact on oil prices and directly related to the Canadian dollar. All right, so pay attention to the 29th of November meeting before heading to the OPEC Plus meeting on 2nd of December. Okay, so that's all I have to share for the OPEC Plus. All right, moving on to something more, I would say, interesting, roller coaster riding and things like that. It's the Bank of England. Okay, so Okay, how should I put it? Yesterday, they actually delivered a surprise, all right? So during the, if you guys watched the BOE prep video, okay, I mentioned that we can expect a rate hike coming from the Bank of England, all right? The whole market was actually expecting a rate hike from the Bank of England as well, all right? However, okay, they did not carry out a rate hike, okay? Hence, the strong weakening from pound across the board. Okay, you see like 150 pips decline in the pound yen, 100 over pips from pound dollar, and so on and so forth. Okay, so yes, they decide to hold monetary policy unchanged. Okay, interest rate remains at 0.1%. Okay, as opposed to the expected rate rise. Okay, QE remains. Okay, QE target remains at 895 billion pounds. Okay, that means they're targeting to purchase up to a total of 895 billion pounds. Okay, now just show you guys this. Although the Bank of England held its monetary policy unchanged, we want to know if like any members, or maybe some of the members, do they actually feel that it's necessary for a rate hike or change in QE? That's when we look at the voting. Okay, let's start off with the interest rate votes first. Okay, MPC official bank rate votes. We see that the result is 207. Okay, the first figure, the 2, okay, actually relates to the number of members voting for an increase. Okay, then the second figure, 0, indicates that the number of members voted for a decrease, and the third figure, the number of members voted for unchanged. Okay, so 207 here corresponds to 2 members actually voted for a rate hike, a rate increase. Okay, while the remaining 7 members actually voted for no change in interest rates. And you can see from the previous 099, this is actually a bullish, a hawkish, I would say, a hawkish move coming from the Bank of England. All right. So yes, no hike for now. Yes, fine. But at least we are seeing this this shift in tone, okay, towards the more hawkish side of things. Okay. Then let's move on to assets purchase, which is QE. Okay, we see that what was being released yesterday is 036, meaning 3 members actually voted for a decrease in quantitative easing bonds purchase, okay, as opposed to the previous and also the forecast of just 2 members. So you can see from the voting alone, yeah, there is a clear shift in tone. All right. So that's it for the voting. Okay. Okay, for what it's worth, all right, I was just talking to Scott earlier today that Governor Bailey, okay, as you guys know, Bank of England Governor Bailey has been, very hawkish recently, right? Especially the previous meeting when they mentioned that interest rate hike can actually take place way before the QE, okay, ends, right? So, Bailey has been sending so many hawkish messages such that the Bank of England are actually expecting, the market is actually expecting the Bank of England to hike interest rate, okay, but they didn't, right? So that actually led to, the market bringing back the whole unreliable boyfriend label, okay? And they are actually starting to, label Bailey as the unreliable boyfriend number 2, okay? Number 1 being the previous Bank of England governor, Mark Carney, okay? Because of his, that's what they say, because of his poor communications in terms of monetary policy, okay? So I guess this time around, Bailey did it, right? He repeated what Mark Carney had did, in the past. Hence the label unreliable boyfriend number 2. Okay, so yeah, just something just for the fun of it, after having, because we have to go through this whole monetary policy, so we just need some, I don't know, some jokes to entertain or something. Okay, so the next thing that I would like to highlight to you is the economic projections. By the way, I'll be sharing the links with you guys later on, so yeah, don't worry about not having to get the report and statement and things like that. Okay, so economic projection wise, inflation, okay, let me make sure I get it right. Okay, so this is 2021, 2022, and 2023. Okay, so we see that there is actually overall, I would say, upwards revision to inflation. All right, the figures in the brackets, okay, represents the figures of the projection from the previous time, which was back in August. Okay, so you see that from 4 to 4.25% for 2021, 2.5 to 3.5 2022, and 2% to 2.25% in 2023. Okay, so overall, there's a upwards revision in inflation. Now, why is that the case? Okay, you guys probably can actually guess it, right? Due to rising energy prices and supply chain disruption. Okay, and now with this whole upwards revision of inflation, okay, we can, well, it's actually, I would say, a hint that the Bank of England is sending out, because they have mentioned before that with this whole, well, there was previous meeting, okay, with this whole strong rise in inflation, we have to tone it down, through means of increase in interest rates, okay, even if we have to do so before ending QE. All right, later on, I'll bring you guys to this point that they actually made it out explicitly. They actually wrote it out explicitly in the report. Okay, now moving on to the GDP. We can see that the GDP, well, overall, it has been revised downwards for 2021 and 2022. Okay, reason being is because restrained growth. Okay, the ongoing supply chain disruption that we are facing right now, that the world is facing right now, is actually having is actually restraining growth in well, not only in England, not only in the UK, but across the world as well, right? So hence the Bank of England actually revised down their economic growth forecast, okay, in the near term, 2021 and 2022. All right. Then the last important indicator is the unemployment rates. Okay, yeah. So for the unemployment rates, we see a revised downwards for 2021 and 2022, which is a good thing. Okay, and it remains the same for 2023. All right. So the downwards revision, okay, is most likely due to the whole furlough employers issue. Okay. So I think in the report, yeah, I read in the report that they actually mentioned that the number of furloughed workers, okay, actually exceeded the BOE's expectation, which is actually not a good thing. All right, but then, okay, I think there was a report released just earlier this week. Okay, some economic data released that says that most of the furloughed workers actually went back to their employers on the same hours. Okay. Here are the figures, okay, 6% of the furloughed workers actually went back on increased hours, meaning, previously they were working, say, for example, 60 hours a week. Right now, they have returned to work at a higher than 60 hours a week, kind of, work week, all right? And 65% actually went back on the same hours, and 16% went back on reduced hours, okay? That easily adds up to like some 80 over 90%, all right? The remaining, of course, they either choose not to go back or they just remain unemployed, all right? Which is a sad thing, of course. But, given the number of the high number of furloughed workers, previously, and right now we are seeing a majority of them actually going back to the workforce at least the same hours, same number of hours per week or per day or per month, all right? This is actually a good thing, right? And so because of that, the Bank of England actually toned down, revised downwards their whole near-term unemployment rate, all right? So overall, I would say that this economic forecast is, I wouldn't say it's a good or bad thing, all right? I would say it's more like positive towards the Bank of England's, I would say motivating, okay, when it comes to the Bank of England's hike in interest rates, all right? So let me show you guys this. I think I will have to search this up. Okay, so over here we can see that the committee judges that provided the incoming data, particularly on the labor market, are broadly in line with the central projections in the November monetary policy report. It will be necessary over coming months to increase bank rates in order to return CPI inflation sustainably to the 2% target. So I think the Bank of England has already made it clear. Okay, we have to increase interest rates in order to bring inflation down to our 2% targets. Okay, even if we have to do so before the whole QE were to end. All right. So with that, we can really expect the Bank of England to carry out a rate hike probably next month or early next year. All right. But whether or not it's going to be like a continuous hike in interest rates, for the subsequent meetings, okay, this remains to be unknown, okay, because it depends on how inflation will behave, right? Because the whole purpose right now of the Bank of England hiking interest rates is to bring down the high inflation level. Okay, if let's say one hike is sufficient to bring down inflation level, then there's no need for the time being to actually carry out more hikes. Okay, so with that, I think I've spoken a lot on the Bank of England. Let me see if there's any question first, because I think this Bank of England monetary policy meeting can get quite, I would say, a mouthful. I would say. No questions? Okay, good. So moving on to the last item that I have to share today, NFP. Okay, so before that, I know that I've not spoken on the recent FOMC. Okay, I'll be writing up an article on FOMC. Okay, and I'll probably be putting it up today or tomorrow. Okay, so that will be I would say, thorough coverage on the FOMC. Okay, so with that, okay, we know that. Okay, just a quick summary of what the FOMC carried out. Okay, basically they just tapered. They tapered as expected. Okay, they tapered by 15 billion per month. Okay, 10 billion from the US Treasury and 5 billion from the what's that again? Agency mortgage-backed securities. Okay, MBS in short. All right. So for November and December, okay, that's something that they have already confirmed. All right. And as for future tapering, okay, Paul mentioned that they may actually adjust, accordingly, depending on whether the economy requires a higher QE tapering rate or not. All right. So that's basically about it. All right. So moving on to the non-farm payroll, with the whole QE tapering, being started. All right. Is the non-farm payroll data still important as of now? Okay, it's a clear yes, because although QE has started tapering, okay, we are still, well, I would say the US is still quite a bit of distance from a hike in interest rate. Okay, so remember, Powell has mentioned many times, and I've also mentioned many times that a QE tapering does not imply a hike in interest rate is coming. Okay, that's one thing. Second thing, he also mentioned that this whole jobs figure is still far from maximum employment, which is what is required in order for the Federal Reserve to hike interest rates. Okay, so I mean, with this whole jobs data still far away from, I think it was the last figure was, I think, around 5 million. They are still 5 million short from the pre-pandemic level. Okay, so the short answer is yes, it is still required. Okay, so this time around, the Bureau of, I would say the market sentiment is that 455,000 jobs will be added into the jobs market for the month of October. Okay, as opposed to the previous disappointing figure of 194,000 jobs being added in September. Okay, so I would say 455 is a good figure. Okay, it's a good progress, I would say, towards the whole maximum employment and the pre-pandemic level. Okay, so if we were to see 455 coming out or somewhere around that figure, okay, we can actually expect a further strengthening in the US dollar. Okay, so if you guys want to trade, the non-farm payroll, like I mentioned earlier this week, there's tons of trading opportunities in the later half of this week. Okay, non-farm payroll being one of them. Okay, because if we were to see a disappointing figure again, that simply means we will be very, very far from we'll be I would say the progress will slow down. Okay, in terms of moving towards the maximum employment criteria in order for the Federal Reserve to increase interest rates. Okay, but if we were to see a strong figure, or maybe a stronger than expected figure, then the US dollar is just going to strengthen. Okay, it's likely going to strengthen. Also, okay, if you guys are trading, pay attention to the revision figures. Okay, for October and September. Okay, because from the previous report, we see that the previous 2 months, okay, figures have been revised upwards, which is actually a good thing. That means they underestimated the number of jobs being created in previous months, and now they actually revise it upwards. That is added optimism from the Bureau of Labor Statistics. Okay, so if you guys are planning to trade, just be careful of this revision, and I will just break it down on Monday. Okay, on what goes on during the NFP. Okay, so with that, I will just put up the article on FOMC today and tomorrow, just to give you guys a thorough update on what went down during the Fed's meeting. With that, let me see if there's any more questions. Tons of chat, but no questions.
There's a lot of comments that they like your shirt.
They like my shirt?
Yeah.
Oh my goodness, this is like a 2-year-old, 3-year-old shirt.
So for everyone who's watching and you like Kim Hong's shirt, I've just posted a picture of the behind the scenes. It's on the club platform. You can see the picture of it there behind the scenes. Not just the top part of the shirt, the whole ensemble. It's a traders fashion day now.
Should we do a behind the scenes video of currency call next time or something like that?
There's already one picture up on the platform already, man.
We need a video.
Okay, we'll do that. We'll work on that.
Okay, back to you, Scott.
Thank you for that, Gimme, as well. And it is a big call, guys. So I'm going to be brief in regards to talking about the US dollar index as well. Now, I did see someone asked about a dot point summary on the FOMC. I will share that again. I did share that yesterday morning as well. So I will redo that in the trading floor chat as well, just to catch up, and Kim Hong will also share his thoughts. US dollar is really strong already. And my thought process on NFP is it's been really hard to pick what it's going to do. Now, we've seen the initial jobless claims. They actually came out lower again, which is good. It's just hard to say, we're going to see a significant move higher here in regards to the US dollar, because we're going to have to see that NFP come out. The reason for that is it indicates that the job market is going really well, which is a criteria for the Federal Reserve to be meeting, and that just insists that this inflation situation is okay because we've got this rising workforce as well, and they can then really start working on tapering potentially faster, and then this interest rate decision. So that's really why it's so important. Now, there already have been some moves as well in the market. I posted the Aussie dollar sell trade. I think Imran took that as well. So that's moving okay. But again, it's a little preemptive. So when things are still a bit unclear, be cautious of that, and don't hold and hope into a big news release as well, because things can get a little bit haywire. Even if NFP comes in a little poor, it can still shoot the US dollar up or down quickly and then back up, and you just sort of get whipsawed out. So be cautious. I quickly want to touch upon the news from yesterday as well. Kim Hong went into great detail as well about NFP. So I just want to quickly talk about the situation with the news last night. I'll just get up the Forex Trading Asia calendar as well. Make sure you check out the site, guys. Jin posted a pound CAD trade idea, as well as a fundamental breakdown on that as well. And Gim shared the RBA review as well. So make sure you check that out. But just in regards to this, we've seen 269K, 275 was expected. Now, this is really low, historically low with the initial jobless claims. And then we did see unit labor costs were up 8.3%. On Wednesday night, I just want to touch upon the ADP non-farm employment change. That was up considerably. But again, the correlation, I talked about that this morning in my morning market update video in the trading floor chat. That's not historically strongly correlated. So, but it's just, again, it's just, we're adding all these things together now. And then we do have NFP tonight, so make sure you're in the trading club as well with LCMS. And if you're watching this and it's the mid-afternoon, because there is a delay for the general public, make sure you join the LCMS Traders Club as well with the link in the description section. And what I'll do now, guys, is just quickly back to the charts. So for really the point of interest is, if I just go to the 1 hour, zoom in, we've already got some strength here. And we are looking at around 94.50. If you're already in trades, it's, we could just be front running. And if expectations are met, more US dollar strength. If not, it just depends on the number. So you've got to be flexible and be cautious as well with trading after the event as well. All right. So those are my thoughts on the US dollar index. In regards to picking a number, it's a tough one. It's a tough one. Maybe we'll finish on that. I don't want to say closer to expectations than before, though. So I think it's going to be pretty strong for the US dollar. Now, guys, that is the US dollar index update. We now have Jin here just to go through the CAD, and we'll have crypto after with me as well. So over to you now, Jin.
Thanks for that, Scott. I have no idea what else to say now. It's pretty much everything that needs to be said has been said. I think it's quite short and sharp for the USCAD. We do have the on Friday today, we do have non-farm payrolls to be released. Unemployment rate is going to be, I do believe that it's going to be a 4.7% as expected. I think in this case, the non-farm payrolls, we should see the 450. I think we might even see probably close to 500. So I do anticipate a bit of strength for the US dollar. It's interesting that the Canadians employment change is only expected at 50K given last month's at 157. I would anticipate that the way the Bank of Canada was talking about the economic performance recently, we should be seeing a better number here. So I'm looking for a better number in terms of the employment change. And I think for it being at 50, it's quite a low number, quite an easy number to beat. So we might see this easily beaten, which could bring some strength to the Canadian dollar. Also with unemployment rate looking to drop from a 6.9 to a 6.8. What I'm thinking here, or what I'm looking for here, is possibly some downside move or some strength to the Canadian dollar in conjunction with that possible strength with the US dollar, with unemployment rates dropping to 4.7 and possibly non-farm payrolls going to almost 500. Even at the 400 plus range to 500, I do think that we'll see some US dollar strength being applied tonight. With that said, I do want to touch on a little bit about the Bank of England news last night. Was that the expectation on most on Forex Factory was the 7.2, but what we actually had here was here on the forecast was a 6.3. So this is one of the reasons why you want to have multiple sources of forecasting, of projections. This is one, and this is also one of the reasons why I use these projections here, is because that came out as a disappointment. We were expecting 3 members to vote for the hike. What came out was 2 members voting for the hike. That's why we saw that pound drop. So it's not just because they didn't increase rates. I actually didn't think that they would increase rates. I thought that they were likely to show a sentiment of rate increase, but it was not as strong a sentiment as it came out, as it was expected to be. That's why we saw the pound dollar drop. All right. So with that, what could happen in terms of the charts here on the USCAD H4 time frame? FOMC, I was guiding the members through this, you guys through this, expected a big move for it to break above and head towards the 126.18 level. It didn't do that. It hasn't moved as much. What I think is likely to happen here is that given good employment data from the Canadians, good employment change, a slight drop in unemployment rate, I'm looking for that slight move towards the downside on the USCAD, that strength for the Canadian dollar. But if we do see the non-farm payrolls being that 450 to 500 number, if we do see the unemployment rate drop to a 4.7, possibly even a 4.6%, we could see that US dollar strength come back into play. And I would be looking, in this case, for the non-farm payrolls, I'll be looking for a big reaction of this 124.56 level. So I'm looking again back to that trade opportunity we talked about for the FOMC. Above 124.87, above 124.87, you could be looking at a 50 pip stop loss for a good 120 pip take profit level towards the 126.18 level. This is a way above, this is above a 1:2 risk reward ratio towards the upside. If we do see a bad non-farm payroll, and I'm not ruling that out considering what happened last month, where we saw 194, given we were expecting the 4,500 again. If you do see a bad non-farm payroll, then it would make the trades a lot easier. You could be looking for it to break below 124.56, and then you're looking towards that downside of the recent low points. Last week's low at about 100 pips, you again can be looking at that 50 to 100. So those of you who haven't checked out the straddle strategy, this would be one of that opportunity. I think the way it's sitting at this 124.56, if it does continue at this level for the next couple of hours towards non-farm payrolls at 8:30 GMT plus 8, what we could be looking for is both that buying or that selling opportunity on the USCAD, given the way the news is being released. So look out for that. I think that there are a lot of trading opportunities on the USCAD given the two news to be released. And also just a quick recap, Aussie dollar didn't break above that 75 level, didn't bounce off that 75, has tracked a bit lower towards 73.95. If we do see the US strength come around, I think we'll see it react to this level before further downside. Not the most interesting pair to trade at this point. I would focus between the Aussie or the Kiwi. I'll look at the Kiwi dollar a bit more with the non-farm payroll, given that if we see a US dollar strength, given that it breaks 7073, we could see very good downside, clear path towards 6930. So you could see a good downside move on the New Zealand dollar H4 timeframe with good US dollar news. The euro dollar has moved exactly as we had planned. It did come up, test at 1.16 before tracking towards that 1.1530 support. I think that with the way the euro dollar has been moving, possibly give it a bit of a rest, look to trade other pairs. Even if it does break below, then not the safest trade to be jumping into. I would in fact look at the pound dollar, possibly tracking a bit lower if we see US dollar strength, or also towards the upside if the non-farm payrolls disappoint. Same thing with the US yen and the euro yen. I have been a bit hands-offish on the US yen just because it's been sitting in that horizontal fashion, struggling to break below 113.51 or even tracking towards the upside. Sitting in that range, I think that the US yen doesn't show any chance of a good move at this point. What you could be looking for is some opportunity in the pound yen as it sits at this 153.74 level, right? So with that quick recap, we do see a lot of trade ideas, a lot of trade opportunities for the non-farm payrolls. What you should be doing is also making sure you keep your trades relatively short term, trade the news, and then make sure you manage your trade sizing, trade safe, and trade well. With that, I'll pass it back to you, Scott.
Thanks for that, Jen. And I have shared the trade ideas in the CAD discussions group in the LCMS Traders Club as well for everyone, and also just in the chat here. So it is 8:30 p.m. GMT +8. That's Singapore time, David. So 8:30 tonight is NFP. So not too late actually as well. I've just got a question here in regard. I can write that out in the.
We'll put it in the club platform.
Yeah,
Scott, you want to do the?
Yeah, I'll write a summary. Yeah, definitely, guys. Now let's quickly go to. We do have crypto. It is Friday as well, so let's go and do that. So we've got Bitcoin and Ethereum in focus. There are a lot more, obviously, but I think we'll just keep focused on that as well. So let's start off with this. So we've got on the 4-hour time frame, we do have BTC against the US dollar, and it's been interesting and how Bitcoin has been behaving. So we really haven't seen a proper break, and I talked about this last week as well on Friday, that something was going to have to transpire, whether we pull back down to, I got, quite enthusiastic with this pullback down to, below 53,000, but even around where we had a little bit of an inflection here at, down at 59 or so. And I would say that currently it's either going to be a breakout through 63, and I'll just zoom it in here, 63 or 64,000. I've got 63,600 as a resistance level. So I would say, until that happens, but then we've got, more overhead resistance. So really just with how crypto behaves is that when we see a pretty considerable run, a pullback where, and the crypto market is not regulated. So you can have individuals colluding and things like that with big individuals such as the big whales that are around. So big sell-offs do happen. So I would say be cautious on Bitcoin. Ethereum, on the other hand, has really broken out over 4,000 pretty nicely. So with this, I would say, and if we go down to, let's have a look in the 4-hour. So it's pretty nice moves that it has had. Again, we've seen a bit of a pullback. So the buying opportunity was, probably around 4,300 or so when it did hit the low, not quite 4,300, I've got 4,400. So with this, again, it's a similar situation because we have seen, if I go to the weekly time frame, and I like to do this when you want to get some good perspective. And I would say that, again, even a 4,000 pullback is appropriate. So what you'll see is that everyone's talking about the big run-ups, and that's where there's a lot of FOMO, and a lot of retail traders are going to pour liquidity in, and they'll be, when you're buying, someone will be selling into that. And that's what you want to think about. So I would avoid the temptation and just say, look, I'm going to check in on this, frankly, probably in a couple of months, because we have seen some big predictions, but it's, things have to be, I guess, flushed out a little bit considering the NFP situation as well, especially if we've got a big number and then the Federal Reserve come out and they say, look, we've really got to do something. So just be cautious of that. And a test of 4,000 or so would be what I would be looking at to get in long on Ethereum. And then Bitcoin, again, just to refresh, I'd be leaving that to around 59 at least, or even more downside. So be cautious. We do have a lot going on today, guys. So make sure you are in the club as well and monitoring the chats. And I'll just close that down there. But thanks for joining us as well. And we'll be sharing the analysis from today as well. So I'll be doing that in the appropriate chats for the trade ideas, guys. So thank you for joining us again. And I hope everyone has a lovely Friday and lots of wada for today and tonight, of course.